Welcome back. YieldMax Group C dividends or distributions were just announced. Overall, they're looking pretty good. I think they look good. HOOY and or Robinhood's single stock ETF produced very well as CONY. And I think Carvana is pretty good. Let's jump in and take a look at it. Okay, I guess starting off. Here's the X post. So HOOY almost 689.8. So virtually 690. Carvana over 2. CONY 79, almost 80 cents. AMDY 56 cents. I'm going to do the single stock ones and jump on the weekly ones. But Netflix 43, Microsoft 41, Airbnb 37, PayPal 27, Fiat 13. Then the weeklies, of course, everybody's been talking about Altert. That's above 10 cents this week. YieldMax, widely held one, 18 cents. SDTY 16 cents. QDTY 19 cents. YMAG 20 cents. Chippy and GPT Y are 37 and 32 cents respectively. RETY 39 cents. And LFGY steadily pair at the 48.76 mark. And then looking at these relative to one another, I will jump to so we go to the website here and go to Group C, take out Group A, just using this little filter button accordingly. And you filter based on what the return of the distribution is for the month divided by the recent share price. Just to look at these a little relative perspective, because they all trade at different ETF prices as far as what the distribution has been as a percentage of that price. We can see HOOY takes the lead here, paying $6.90, which comes in at 9.57%. And CONY was very solid too, the 70, almost 80 cent. I say recent dividend, maybe they should say recent distribution to be more accurate, but trading at a 970 price, that comes in at, let's see here, 8.19%. And then AMDY was 8.77%, again, very solid. And then Carvana at 4.8%. Or I think I spoke wrong on AMDY. It's traded at 877. The percent return is 6.45, which can be seen in this column here. And then Netflix, MSFO, and PYPY were all pretty, I guess, right in this 2.1 to 2.5 range percent. Not the best, but Netflix has been a solid performer over time. But overall, HOOY, CONY, AMDY, on the show, all posting above 5%. Actually above 6.45% to be accurate. Jumping into Group C, just some metrics. I always like to focus on CONY. Why do I like to focus on CONY? Because I guess if we go back here and look at the market cap fund, we can also, I guess if we just focus on the Group C items here. So if you, I'm trying to get that to go away. If you click on the actual item, as I'm doing now, so Microsoft, let's see, there's Carvana, which other ones were there? CONY, or Group C specifically is what I'm interested in. So we got CONY, Carvana, AMDY, we got HOOY, Microsoft, Netflix, and PayPal. Okay. Sorry, I probably should have had this. There we go. Then if you just say keep only, so this is basically Group C, the market caps. As you can see, CONY is by far the largest. If you look at all of these, it's what, take the largest, it's probably like 1, 2, 3, 6, 7 times the largest. Next largest is probably AMDY. But I think this HOOY one, based on the recent performance and just the interest in Robinhood stock as well, I think over time this one will grow. If you're looking at just what people own, CONY clearly by far the favorite here, but I think HOOY, AMDY, I think those might perform well over time, and Netflix as well. That's been a pretty good fund. But that's why I guess I focus on Coinbase. But if we go to Coinbase specifically and look at it, so I guess from a compare perspective, the reinvested dividends, Bitcoin equities are clearly outperforming the YieldMax strategies, but the YieldMax strategies have been doing pretty well for those that are looking for income. As far as the distributions per share, you see CONY has been coming back as of late up to 80 cents. At one point it was down to 43 cents. Of course, the ETF price has taken quite a fall from where it came out at 20 bucks a share. But underlying stock's been doing well. CONY's coming back. We just take a look at the total return metrics. And cumulative dividends been adding. That's the great part of these funds. The cumulative dividend keeps stacking. Although the ETF price has gone down from 20 down to 970 or so, the total return's looking pretty solid, hopefully. It looks like we were back in April of 2024, we broke this 40 metric and been sitting around it up and down. back above 40 for a total return. So that's looking pretty good. And then for those who are interested, I'll probably do that in separate videos, but I also got this CONY in-depth button. So this is for people who really want to get in the weeds in these funds and see exactly what they hold. So I just updated it here today, and this screen here, maybe I'll zoom out a touch so you can try to get the whole thing in the image. This shows exactly what we're positioning look like. So you can see where the synthetic is at 390, and it shows you what strike prices. We got contracts sold on coin, the underlying equity. I won't dive into this too much, but then the ones that are above the line here show kind of insurance contracts or the high part of the credit spread. So these are contracts that they have bought. So basically what happens is if the coin underlying equity comes up, the synthetic gains in value as the Coinbase stock comes up. However, once it hits the contracts that are sold, part of the synthetic upside is capped. And then so you get capped a little bit at 425, capped a little bit at 440, and then it keeps going. Once you hit to 470, the full percentage of what you're capped at is effectively in. So if your entire synthetic, if you're using the entire thing as collateral to sell short positions on calls in order to generate options premium, your gain would be fully capped at 470. But then once you hit 475 here, you start capturing gains again because you got that upside credit spread sold. That's just how it's structured. I also like to show the fund makeup or fund makeup per share. So you can see how these funds are structured if you'd like to create one of these yourself. You can see that majority of the fund is in cash or cash equivalents, treasury bonds, for example. And then this is used as collateral to sell contracts against, which is currently acting as a 2-cent drag on the fund. And then here's your synthetic position, which makes up 36 cents of the roughly $10 stock price. But I'll look to cover that more in depth, but that's just an insight into that. As far as other stocks or other underlying single stock ETFs from YieldMax that employ this covered call strategy, or covered call, or maybe you should say covered call with instead of just selling the call, a lot of times they do these credit spreads that they sell, which is the strategy I like. But HOOY, this has been the one I just want to look at quick. So this one just came out not too long ago. Of course, Robinhood, the underlying share, has been doing great, just basically on a straight up path. Distributions, so just at 6.98 is the highest distribution yet. The first one came out 3, then it's been 6.5 and 6.8. Very solid. Just want to take a look at that quick to make sure that it's been 3 dividends, I believe. Just look at the YieldMax site here quick to ensure everything's pulling in. So yeah, in May it was the 330, then it was the 650, and then just now the 690. Overall, the fund's been doing great. Cumulative dividends added up to 1670 now, which it came out at 50. So, times that by 32, 33% just on the cumulative dividend. The ETF price is also up in the 70s, despite coming out at 50. So very good performance for HOOY. Then I got the other ones here. If you want to look at those, they're provided, but that's an insight into Group C distributions.